Continued trade war tensions Monday generally appeared to eclipse the Institute for Supply Management's reported boost in U.S. manufacturing in June, with most industrial stocks staging only a modest uptick late in the trading session. Manufacturing expanded for the 22nd straight month, with the Purchasing Managers' Index topping most analysts' expectations and the highest level since February. ISM's Manufacturing Business Survey Committee Chair Timothy Fiore noted that while the latest measure indicates strong growth, inventories continue to struggle to maintain expansion levels as a result of supplier deliveries slowing further. The length of delivery times have increased in June, likely due to a lack of truck drivers. Meanwhile, the overall boost in manufacturing helped the industrial sector pick up some gains Monday, helping the broader S&P 500 retrace earlier losses. However, analysts at NASDAQ said the solid ISM number barely moved the needle after its release, with the market having opened on a sour note amid an escalating global trade feud at the center of concerns. Furthermore, analysts at NASDAQ observed that in each of the past 4 sessions, the market sold down going into the close, suggesting investors are taking a more cautious stance. Data from Thomson Reuters' U.S. Lipper fund flows seems to support the observation, as equity funds suffered outflows in each of the past 4 weeks, the longest stretch since February. For the week ended June 27th, all equity funds reported net outflows totaling just south of $8 billion. In the meantime, several industrial stocks continued to rise Tuesday, including Boeing, 3M, Honeywell, and Lockheed Martin. Check out the IBKR Traders Insight page on the Interactive Brokers website to find out what our other contributors are saying about the state of the market, and subscribe to our daily email. I'm Steven Levine for Interactive Brokers.